Back to the post-lunch session. Now, as you were hearing out the door because you were hungry, I was reading out the names of the prize winners, and you probably didn't hear them, so here they are again. In stand 59 for Gallagher, there's a bottle of whiskey. Adam Schofield is the lucky winner. Adam is from Kingfisher Mining. Doesn't specify whether it's Irish whiskey or the inferior product, of course, which is Scotch whiskey. At stand 26, the SRK stand, Dr. Nick Doreen is the winner of a bottle of Cab Sav. There's also a bottle of SB, which you can collect from the booth. The Expedio stand 16, there's a bottle of Cab Sav. Wayne Richards, you're the lucky winner there. Again, pick it up from the booth. Alchemy Resources provided the most valuable prize of the day, a bottle of chili sauce. And three of them, Andy Searle, Matthew Keane, and Taylor Howard were the winners. And I know when they picked up that bottle of sauce, they thought, yes, this is definitely the most valuable prize I could have won. So well done for you. Core Plan have provided us with an Apple Watch, which we announced the other day. Helix Resources, a bottle of Chardonnay. Pete, who's with business development with Max Geo, you can collect that from the Rego desk. And Moho Resources, a bottle of 2019 Shiraz, again, pick it up from the registration desk. Mick Phelan, you are the winner of that. So there you go, that's all the prizes. Welcome back. It is, first presentation is Caspin Resources. It has an exciting 2021, early exploration success at its Yarrawinda Brook PGE nickel copper project in north of Perth. And to explain what's in story at Yarrawinda Brook, as well as the Mount Squires project in 2022, we welcome Caspin CEO Greg Miles. Welcome along, Greg.
Thank you, Jerry, and thank you everyone for coming. Thanks to the organisers, as usual, for giving Caspin the opportunity to speak and arranging such a high calibre range of speakers on the what is sometimes known as the graveyard shift in this conference, although you wouldn't call it that. No. Anyway, moving on. Okay, so actually, contrary to what the introduction said, we're actually not going to focus too much on some of the what's going to happen in 2022 for the company, including the Mount Squires project. We're going to focus more on what's happening in the short term, which I think is probably more relevant for investors to focus on. So the usual corporate snapshot slide. This slide actually, apart from the share graph, probably hasn't changed much from this conference last year. Now, what that actually means in sort of more simple terms is this, and this is what a Caspin share gives you. It gives you a pretty well-recognised team. Jerry, I'm just going to turn this around so that I don't have to keep looking at the screen. The team, pretty reasonably high calibre kind of team, where we pride ourselves on doing good technical work, so we've got plenty of good, capable people at board and management level, but across the board we've actually got a diverse range of experience. So that's probably the first fundamental to exploration success. And then secondly is obviously having great shareholder support. And we were probably one of the best floats of 2020. We've also raised money again last year, and continued support from a couple of our major shareholders. And you'd recognise obviously the Chalice logo. They're our major and our largest shareholder on the register. We've got a great relationship with Chalice. That's obviously a strategic relationship, which if you're not familiar with the Caspin story, you'll recognise shortly. But also Tinci Materials, which are a chemical company based in mainland China. They've got quite a broad business, which includes a bit of a diversification into battery precursor materials. So quite a heavy, a very large company. They're listed on the Shenzhen exchange. I think they're worth about $15 billion US. And then thirdly, having the right projects in the right region. For us right at the moment, it's all about the Yarrawinda Brook project, which is what we're going to talk about, and then bringing that all in together. We are an active explorer. So you know that when you buy a share in Caspin, your money is going to work. So the two projects, Yarrawinda Brook, the focus of this this talk, but not to sort of pass on the Mount Squires project. That's something that, look, if I was going to look back on 2021, it was a great year, except for the fact we probably didn't do as much work out there as what we would have liked. The West Musgrave is a really interesting place, and I'm hoping that Oz Minerals, who are talking in this block later this afternoon, will be talking up the West Musgrave project, because it's really exciting. I'm looking forward to seeing the results from that, and that will, I think, open up the entire West Musgrave region, and we're well placed there with both sort of copper gold and nickel copper sort of potential there as well. So the Yarrawinda Brook project, for those that aren't familiar, just up the road from Chalice Mining's Julimar project. It's about an hour and 20 from my doorstep to the centre of the project, so very conveniently located. Caspin's got a reasonably large land holding, smack bang in the middle of what is probably the most exciting nickel copper province in Australia at the current juncture. Now, what's I guess probably in most people's minds at the moment is the results from a drill hole that we released last week. That was at what we call the XC22 prospect. That's a photo of the land there on the right-hand side, and you can see the drill rig sort of parked off on the tree line. Most of our work to date had been focused more on this sort of what we call the central Yarrawinda Hill area, which is the hill in the background. But this XC22 is a geophysical anomaly that we've been toying with for some time, and drilled a hole late last year, which we announced the visuals for in November, and then put out the results last week. And you can see that we got two really interesting sort of results there from a nickel copper perspective and from a PGE kind of point of view as well. And that's what we'll sort of explain why that has got us excited. And just for a bit of background on how this sort of target came about, XC22 is a slightly different sort of beast to some of our other targets at Yarrawinda Hill. Gravity survey was the real changer for us, and it allowed us to map the intrusion much better than just using magnetics by itself. And I guess what we found, what interested us was that this area was a mag high but a gravity low. And for those of you that have been following the Chalice story, you'd recognise that Gonaville itself is that sort of has that sort of geophysical characteristic. And so that was kind of interesting. And then there was also this airborne EM anomaly that sits over the top of it as well, which is where the XC22 name comes from. It was quite large, but we were a bit concerned that it might have been a false positive. The soil geochem was a bit mixed. There's obviously plenty of palladium kicking around the soil, nickel and copper. So it was a little bit enigmatic, and look, we just had to drill it. And that's, at the end of the day, drill bit tells the story. And so that's just zooming in on the anomaly itself. We plonked hole 22 right in the middle of it, and 46 metres down, 2 metres of semi-massive of sulphide. We could see the chalcopyrite in it. We just needed the assays to confirm the nickel results, and sure enough, 2 metres at 1.5% nickel and a bit of copper and a bit of palladium and platinum kicking in there as well. Fantastic. It's not a world-beating sort of assay result, but given the context of the size of that anomaly, the relatively shallow dip, the fact that it's open in pretty much every direction, and you can see there's a thrust plane there that is a contact between the mafic package and an overlying granite. A lot of that EM response might actually be masked by the granite. But that, to be honest, actually isn't the real story. The real story for me is the lower PGE zone that sort of came as somewhat of a surprise, because it's not, to look at, wasn't anything particularly special. It's more of a disseminated style of mineralisation, very low sulphide, only probably 1 to 2% at most. So I guess it's probably what we'd consider high tenor. But the assays came back there with a 13-metre zone with combined about 1 gram per tonne 3E. So that's platinum, palladium and gold all adding up together with a bit of nickel and a bit of copper. Now, for those that aren't that versed in these sort of systems, that doesn't sound like a lot, but again, and apologies for having to keep referring to the Chalice presentation here, but if you'd seen that, you would have noticed that Chalice's global resource grade is about that number. So for us, that is actually the first intercept where we've got something that is probably at resource grade, in today's numbers. So, we can't talk in equivalence or anything like that, but that sort of grade is actually starting to get on the economic side. But I guess probably what's just as important is that it's starting to fit the geological model there. So this mineralisation occurs at a contact between this sort of lower peridotite unit and the mafic unit above it, and probably there's a bit of magma mixing on that contact. And you can see there up dip, so there's the YBR series of holes. They're holes that go back into the 1980s. So it's a legacy data. And they were only ever assayed for PGE, so we don't really know if there was any nickel or copper associated with it. So, which, to be perfectly honest with you, we don't even consider those holes effective. But that resulting YARC 22 does correlate really nicely with that historical work. So, and I guess that's what really gets us excited. And then let's look at it in plan. And this is where things start to get really interesting. So we've got the airborne EM anomaly outlined in purple there over a magnetic image. And so the airborne EM anomaly, we're pretty confident is mapping that sulphide that we saw about 40 metres downhole. But the mag image you'll see is much broader, and that's associated with the peridotite, that lower ultramafic unit. Now, we've thrown a few extra sort of historical results on there, and you can see that those historical PGE results, holes that we don't necessarily consider effective, but a reasonable sort of guide in terms of where our exploration should be heading, are not necessarily associated with that airborne EM anomaly. They're associated with a mag anomaly. So we think that's mapping that same zone of mineralisation along that ultramafic contact. And that's a large area. That's over a kilometre along strike and open down dip. And you can sort of see that mag feature probably does continue down dip. The mag kind of gets a bit fuzzy, which is the influence of the granite masking that ultramafic. So that is what's really got us excited. And that's going to be the focus, I guess, for exploration in the short term. Now, that's not to say that it's our only, we're not a one-trick pony. We're not putting everything on black. We've still got a number of other targets. This area is still at an early stage of exploration, and we're still waiting for some of our results from last year to come back, which is all the black dots you can see on that. This is our best attempt so far at demonstrating what is effective drilling in the Yarrabrook Hill area. Lots of gaps, and in fact, there's geochem anomalies there without a single drill hole. So, and this is just a bit of an example of what the central Yarrabrook Hill area looks like. Very large thicknesses of anomalism. What we're really trying to look for here is a sweet spot, and we're kind of open-minded about what that sweet spot is. We're still working on a massive sulphide kind of model, as well as narrow vein, like some people refer to Marinsky Reef, the South African sort of style of mineralisation as a possibility. But anywhere where you can get sort of concentration of these PGEs is basically what we're looking for, and it could just be a change in geometry of the intrusion. So there's a number of different possibilities. It's a complex area, but and I guess we're still on a pretty steep learning curve. But I think the picture is starting to fall out, and we've got a lot of confidence in our exploration going forward. So this is what you get here with Caspin at the moment. We've just given the market our best result to date. We've already demonstrated that the area is prospective. But now we're starting to get into something that's starting to look real. And the analog is Chalice's Julimar project or Gonaville deposit, and this is what we're starting to see a lot of similarities. And more importantly, we're active, and so drilling will start again by the end of the month. 2 rigs, RC and a diamond rig, continuing pretty much where we left off last year. There was unfortunately, a lot of our drilling conditions were quite difficult, and we weren't able to complete all the holes as deep as we'd like. So, a diamond rig will come in and finish off some of those holes with diamond tails. And I guess, what we see ourselves as being probably the most advanced exploration plan in the West Yilgarn, behind what Chalice are doing as well. So that's Caspin. That's probably the short-term Caspin. There's a lot more to Caspin. We haven't talked about, we've talked about probably the Yarrabrook Hill areas is a small part of the Yarrawinda Brook project itself. So we're developing a bit of a pipeline of prospects. All we're talking about today is the most advanced, but there's still a lot of other things that we're building up that are still in the early stages of understanding, and you will continue to work them up. And then, of course, there's the Mount Squires project, and hopefully we'll be out there in the middle of the year on the ground, and that'll be the catalyst to talk to you about the exciting things that are going on out there. Experienced team, well funded in the right commodities, and I think, Jerry, that pretty much sums up the opportunity with Caspin.
Perfect, and I love the mixed metaphor of the one-trick pony on black. Gascoyne Resources is an established gold producer situated just north of the town of Mount Magnet. Gascoyne is currently developing 2 low-cost open pits, actively adding new ounces through aggressive exploration and progressing several advanced resources into production. Managing Director Simon Lawson is here to provide an update on the current state of play at Gascoyne Resources. Welcome, Simon.
Thank you, Jerry. So that's our main open pit there. I'll pretty much focus primarily on that. This is an exploration conference, so I apologise if I'm not a classic geologist. I am an ore and waste guy, a mining geologist by training, and many years in the mining game. I feel most at home in the mining game, so I will focus on that pit and what it means for this company. Usual disclaimers. Coming into this company fairly recently, I don't know if everyone in the room is aware of the history, and I apologise if I say the word Firefly Resources or refer to the previous company that I was working for, but the last time I presented here, I was with Firefly Resources through a merger process that was drawn out late last year. I'm now the Managing Director of Gascoyne. Coming into this company has been a challenge, but I suppose I'm most at home when it comes to a challenge. In adversity comes opportunity. So coming into the business, struggling gold miner, came out of administration, a history that I probably don't need to go through, but what I look to is the future. And I suppose the key takeaway from a slide like this, there's a lot of key words on here, but one of the things for me was looking at the people that are on this site and within this business to see what we could do. So I worked through a bunch of different things. Focus, optimize, and maximize was, I suppose, a catchphrase that I brought out of this. I'm not going to go through all these things in detail. You can read it at your leisure. But basically, Gascoyne needs to get its stuff together and move on from the past. Active board, a few changes just recently. We've optimized that board, lost a member just recently. We've got an interim chairman at the moment. Good cash balance, probably could be better. That's what we're working on. Again, focus, optimize, maximize. If you look at that image there, that is the key asset of the company. That's Dalgaranga. Open pit in the middle there, tailings dam on one side and the waste dump on the other. Plenty of other projects within the business. I'm going to focus primarily on Dalgaranga. The people in the business, I'm prone to saying that there's only really 3 secrets to the resources industry, and that is assets, people, and money. We have a great set of assets. We have adequate funding. We can generate our own cash flow, but the people part of this business was the key aspect I looked to. A lot of IP exists within companies that have been around for a while, a lot of geological knowledge, a lot of good skills within this company. That was something that I needed to get a hold of very quickly. So I flew up there on the Sunday before the departure of the previous managing director to talk to the staff up there and make sure that we had those people. We secured that, given the way that people are fairly mobile in the industry at the moment. It was a key thing for me to make sure those people hung around. Production and costs. I'm not going to wax lyrical about this. Costs are escalating. We are running out of ore at Dalgaranga. That has been a well-known fact for some time. Life of mine was challenged. It is challenged. I've come in the door to say, well, you know, how do we change that? How do we look at this asset? How do we take that 2.5 million tonne per annum mill and use it to the best of our advantage? We are in a region of known gold production, of known gold assets. Again, there's a lot of spin I could put on this. There's a lot of things within 100 kilometres of us that we could bring into that mill, but looking directly at that mill and what's in front of it, we started to take a very near mine approach to what we needed to do. The mill was commissioned in 2018, so very new, very low cost. Given its history there, the costs have been trimmed right back on every aspect of that business. And that comes back to the people that were in that business when I came in. And how do I leverage that low cost processing asset? The best way to do that is put more ore and better grade ore into it. Our focus has been Gilbey's, the main pit. And whether you think it's coincidence or not, we managed to make a discovery just before this conference, which we've been talking about fairly loudly, and put out another update to that today. We will be putting out updates every week for the next at least 3 to 4 weeks. We've got active drilling at the moment, which is pretty exciting. That's the Gilbey's open pit in plan view. There is a stage 3 eastern and western wall cutback that's indicated on there. I actually put the kibosh on that coming into the business through the merger process. There was a huge cost associated with that, but now I'm dedicated to putting more ounces into that rock to ensure that it's economic and comes back into the plan. As I said, go through at your leisure what we're doing there, but basically the key takeaway is we're drilling. We're a production company that's actively drilling. Again, plan view, that's where we made the discovery. 140 metres away from the pit, there was a drill hole that was 8 metres at 3.9 from 24 metres. That is an outstanding hit in an air core hole. It was never followed up. So, of course, we followed it up. Out of 21 holes that we drilled, very shallow, 17 of them hit gold. We're now on a run rate of 26 of 32 that have gone through mineralization over 0.5 gram. So I'm pretty sure we're picking up the long strike continuity of the main ore body. I'll bring up the section in a second. One of the key sort of hits that we've got so far, 17 metres at 3.5 from 22. I can't understate how good that sort of intercept is when you're less than 1 kilometre from an operating mill. That's it there, tight package of stacked loads. When you look back in history at some of the previous announcements by Gascoyne in the earlier days, it looks very, very similar to those, that arrangement, that geometry, those depths, those grades. There are some better grade loads there and better grade intercepts. We're obviously going to focus on drilling this out as quickly as possible. We've got 2 rigs on site at the moment and we'll be flat out. I want to drill that down to 12 by 12 in the near surface environment to de-risk the oxide profile there and get that straight into the mill and increase this life of mine. That's a fairly terrible image, but I'll go through it. Basically within 10 k's of the mill there, you can see the open pit in the bottom left-hand corner of that red granted mining lease. There's 2 different mines there. You probably haven't heard too much about Golden Wings, which is up to the northeast there. That actually links back to Gilbey's through a series of magnetics. You can see it in geophysics. There has been almost no drilling below certain depths there. And I probably won't go into too much detail, but there is a lot of potential there within 3-4 k's of that mill that has never really been drilled out. Plymouth is an operating mine. We're currently mining from that, really good grade. Similar orientation to the Gilbey's deposit. There has not been enough drilling underneath that. So obviously we have a rig parked there, priority 2, as well as the Gilbey's North drilling to drill underneath the Plymouth pit. Again, I can't understate how important it is when you have an active mine to be obviously aware of how much ore you have. It won't be too hard for us to extend the depth of that pit or a long strike extent of it. Sly Fox, which was a previously operating open pit. I believe I asked the question on the first visit there, where does the ore stop? And the answer was not, I suppose, sufficient for me. We will be drilling a long strike from that and find out where that lode trend has gone. There are significant grades in there, very good continuity at depth, but I'm not about underground at this point in time. What we want is open pit, preferably oxide ounces, but we need tons. It's a 2.5 million tonne per annum mill. You crush 9,000 to 10,000 tonne a day. That's a serious amount of dirt. One of the other things I'll point out here, Archie Rose, there is a trend called Greencock, but for obvious reasons, I wasn't really a fan of that name. So I've dedicated it to my favourite gin, Archie Rose, following the trend of gin names here. Within the database that existed, there is a significant number of drill holes drilled to a 50 by 25 metre spacing that has allowed us to embark on a maiden JORC resource without drilling another hole. So that was drilled out in 2018 through a series of, let's say, events. It has remained unloved for a period of time, but I quite like it. It's within 7 kilometres of the mill, so we'll put a JORC resource on that. Hendrix, spoken about a lot recently, fairly high grade within 3 kilometres of the mill. Obviously, we'll be following up on that as well. But the key message to take away is we have an operating mill, we have an operating mine in Gilbey's and Plymouth, and we will be expanding our mining fronts across several different deposits and building a pipeline to change, I suppose, the perception of Gascoyne. I'll quickly fly through these. I won't read them all out, but basically you can see there, Plymouth, the reserve pit is fairly shallow. The design so far, there's existing hits underneath it. We follow that up and build that into a new mine plan, given current gold pricing and the fact that we're so close to the mill. It's not hard to see we're probably going to be able to pull that down and a long strike. Some pretty good hits there outside of existing resource. Easy. Sly Fox, the same. As I said, I mean, I'd love to go underground. That's predominantly my career and my experience. However, there is a significant number of drill holes here that need to be followed up, and there is more extent to this, I believe, along strike. So we'll be testing that. This is Archie Rose, just to give you an indication. This is not currently in resource, but you can see it probably should be. Looking at some of those depths and some of those grades, the widths, the thicknesses, and given the proximity to the 2.5 million tonne per annum mill I keep crapping on about, that is something that we need to get in there fairly quickly. Hendrix, just to give you an idea of the geometry, relatively thin. We still trying to understand the geometry at the moment, but it's good to have a pipeline and a few things to work on. And where I came from. So Firefly, the last time I came up here and spoke, it was about Firefly and its Yalgoo project. It hasn't gone away, still there. Melville gold deposit, 200,000 ounces at about 1.5. It's a great little deposit. It has a great geometry to it from surface. There's a lot of gold there. It is 110 kilometres away. I suppose when you look at risks and the costs involved with moving dirt 110 kilometres, versus mining something that's 100 metres away from your existing mine, you put a bit of a priority ranking on that. While this is a great deposit, we'll be focusing on near mine at Dalgaranga until costs start to ease at least. The next 12 months, it's about that, about Gilbey's North, Plymouth, Sly Fox, about getting a resource on Archie Rose, getting some mining permitting up there, and about feeding that mill. Again, we have a central processing hub. It's a strategic asset. It's a very young mill comparatively to a lot of other mills in the region. It has a lot of capacity. Obviously, that is a liability as well as an asset. So we are very keen to keep that throughput. We're operating above 2.5 at the moment, about 2.7 million tonne per annum, and it's humming along very nicely. Unloved asset. So there's been a lot of talk recently about some of the other assets within the company. I have been known to talk about this asset as being where I would have liked to have set up a mill if I had a chance to go and do this whole thing again. I do really like this area. Unfortunately, well, fortunately for us, we are very focused on Dalgaranga. This is a great standalone asset on its own. There's been a lot of talk about this recently from, well, in previous history from Gascoyne as being a second development project. I don't think we've earned the right from our shareholders to go and throw capital at that at this point in time. What I want to do is run Dalgaranga as well as possible, and we'll use the assets that we do have outside of that to generate as much value for our shareholders as possible. It is an amazing deposit. At one stage, I think it was quoted close to 1 million ounces at a gram. I think it's on the books for 5,000-10,000 ounces at the moment at about a gram, but there's some very high grade aspects to that Glenberg area, and Mount Edgerton is pretty good as well. So we will be doing something with that fairly shortly. Key takeaways: we are a gold producer. Production guidance, I'd love to be doing 100,000 ounces. That's where I want to get to. We'll start with 70 to 75 at the moment and make sure we do it at the best margin possible. We're optimizing the business plan, reducing the cost, improving cash flow, and increasing mine life. I mean, it's pretty simple. That's what we want to do. We have a modern plant in a great part of Western Australia. We have an emerging discovery at Gilbey's North. That's one of the reasons I'm quite happy to stand up here in an Explorers Conference and talk about what a producer is doing. We are actively exploring, we are drilling, and we will be feeding that mill, generating cash. We're targeting delivery of a consistent plus 1 gram head grade. That might be, some people might consider that to be a bit of a stretch, but that's what I want to do. If we can get it up to 1 gram and over 1 gram, we will be producing good margins. We have a strengthened balance sheet. We don't have any hedging at the moment, so we're fully exposed to that gold price that I'm hoping you're all checking. And we're making good margin at the moment. We had a record month last month. We're looking pretty good for this month as well. And that's what our focus is. We're fully engaged, highly experienced team, and we're working together to unlock and provide a bright future for our shareholders. Thank you.
Global Lithium Resources was ranked by corporate advisory firm HLB Mann as having the second best performing IPO on the ASX in 2021, with the company's share price increasing 375% by year end. Chair Warrick Hazeldine is here to tell us more about this growing WA-focused lithium explorer with 2 highly prospective lithium projects right here in WA. Warrick, welcome to the program.
Thank you, Jerry. It's the last afternoon of this conference, so let's have a little bit of fun. I just want to thank Vertical Events for running this event. It's really important for the industry. I thank you all as investors, promoters, diggers, dealers. You do a lot to support Australia throughout this period. And today I want to introduce you to Global Lithium. We're a growing WA-focused lithium explorer, and I want to focus around people, position, and pipeline. Here's a pipeline. I thought as I was bringing this together, back in the early 2000s, we saw a pipeline this. It was the iron ore industry taking off. What was exciting about that, it was driven by the middle class of China. What I'm here to share with you is that we are riding this wave of consumer-driven structural demand and the energy transition to a level we've never seen before. Why is that exciting? It's not just the middle class of China. This has actually been driven on a global scale, and this is our opportunity at Global Lithium. Ron Mitchell provided me with this data. He's just joined us from Tianqi. He's also chairman of the LME Lithium Committee, and you can see some of these numbers are very compelling. I guess the most important thing is he is saying to me today, China will lead the first wave, Europe will lead the second wave, then the States, then Japan. So we see a lot of upside in lithium, and Western Australia produces some 60% of the world's lithium. Let me bring you back to people, positioning, and pipeline. They're all critical parts of building a mining company. I'd like to acknowledge the traditional owners of our land, the Noongar Whadjuk people, traditional custodians, and we wish to acknowledge their strength and their continuing culture and offer our respects to the elders past and present. This is our team. For a $300 million market cap team, we're very, very proud of the quality of people we've put together. I touched on Ron's joined us from the Tianchi. He starts in March. I want to acknowledge Dr. Dianmen Chen, who's here in the audience with a number of our shareholders, having the vision to get involved in lithium some 3 years ago in the Pilbara. Unfortunately, Jamie Wright's moving back to South Australia. He was our founding managing director. We wish him well, and we're in market for a managing director right now. Greg Lilliman, he's probably known to many of you in the room. He's developed multi-tens of billions of dollars of projects in the Pilbara. Recently joined us from Fortescue Metals Group and leads our development side of the business. Haley Lawrence, ESG, we all talk about ESG, but we're actually building out that team in quite a considered way. And the executive are doing a fantastic job. We've had a very small team. We've driven a lot of value in a very short space of time. I would acknowledge Stuart Peterson, who's in the room. He's been announced today as our head of geology. Brian Burke's driven our exploration, our team, Joe and Kim. And also the resource potentials, there's representatives in the room, CSA Global and Orlando, who are punching out 60,000 metres as we speak in Marble Bar. ESG, I talked about, these are the runway which will build this company out. It's really important that we get this right. This is the team in Marble Bar last week, kicking off the 60,000 metre campaign. I'd now like to bring you to our positioning. You can see we're actually closed at $1.47 today. So this was pre-trading halt. We've announced a 9.9 million tonne resource at our Mana project, which we've acquired from Breaker. You can actually see the share price appreciation has been well deserved on key milestones achieved, and we've achieved a lot given we're less than 8 months listed on the ASX. You can see a tight capital structure, but a really, really supportive shareholder base, including Breaker, which we completed the transaction with, and we're looking forward to continuing to build this company. You can see the milestones achieved. I think if you reflect on that in less than a year of listing, that's a remarkable achievement, culminating in, we did a secondary capital raising here and bought Ibn Tiani, which is a chemical supplier into cattle, which I'll touch on shortly. Why is cattle the world's biggest EV producer, owning 10% of this company? I think that graph speaks for itself. We've got 2 projects. There's not many lithium companies that have a project both in the goldfields, like the Mana project, and also in Archer. I think Mineral Resources comes to mind, but certainly operating in the Pilbara and the goldfields, which are 2 very well-known jurisdictions around the world, is a competitive advantage to us. And like I said before, we've announced today we have announced the 9.9 million tonne resource there, which we only acquired that project at Christmas. Marble Bar, I'm sure most of you in the room have been there. It's world-class in terms of infrastructure. We have an airstrip, which the Geologist team are working on, and others in their area, which will drop within 10 kilometres of Marble Bar. We have the township, which are very supportive of mining. We have Port Hedland, not that far away. We have a bore field, which Geologists are using right now. And we have obviously access to the port of Port Hedland. Here's some of our geology and location. I think the most important point here is the size of our tenement holding that we've been able to put together since IPO, which includes a 6-kilometre strike. This is the drilling commencing last week, 60,000 metres underway. It was a bit wet, but they certainly got off and running, and they're doing a great job by all accounts. This is a 6-kilometre strike that I've talked about. This campaign we're running is drilling down to the south of Archer, And any technical questions, we've got some of our technical team at our booth, but you can see some of the grades and intercepts there, gives us a lot of hope. We've also had some gold opportunities emerge, and we'll look to commercialise that this year. You'll see 7 metres at 4.8 gram dirt. That's well worth following up, and that's up there near where the Talga project is, which is Novo's project. But we're not getting distracted from lithium. Here's back to the Mana Lithium project, which I touched on. Acquisition completed just before Christmas. $30 million deal, and certainly delivers us 2 projects in the lithium space, and a credit to the Breaker team to get it to where they are. We saw similar opportunities in Mana as we saw in the Marble Bar asset, and the ability to grow something quite large. This is the pegmatites that the Breaker team have discovered, and we're certainly pleased to announce our resource today. So, news drives share price. The important thing for us, having two projects, we continue to drive news throughout the whole of the year. As you know, it gets pretty warm up in the Pilbara, but as you can see, the team are busy with a 60,000 metre campaign. We've got our metallurgical testing coming on stream. We've got our assay results for both lithium and gold. The Mana project, we look to get on the ground there. We'll do some heritage work and get quite busy. Got metallurgical testing also due at Mana, and we'll continue to do our studies in the background. So in terms of global lithium, we are in 2 highly prospective lithium projects in a tier 1 jurisdiction. We have a attributable inferred mineral resource of 18.4 million tonnes, which is a pretty good effort, you know, within 12 months of listing. We're aggressive on the ground. We've raised money to do the drilling, and we're working hard on that. We've got the world-class infrastructure. We've got a team driven by ESG and fundamentals. We have a strong pipeline of news, and back to where we started, I think this is Kelly Slater, only last week, some 50-year-old, won the Pipeline Masters. So he's navigated many waves and many opportunities, and let's hope that global lithium can continue to grow into the future. Thank you very much for listening.
Thank you, Warrick. And I neglected to mention, of course, that you're also a director of Surfing WA. Warrick has been, for a number of years, one of Perth's leading corporate communications providers, and still does that. And his company is still active. So he's decided to join the mining industry. It was such fun being a corporate communications consultant. He decided, I want to get dirty. I want to get my hands dirty. Well done, Warrick. Coda Minerals, I beg your pardon. Our next presentation is Oz Minerals, where Matthew Gatsambaras is manager of operations now. He joins us with the Oz Minerals story. Matthew.
Thanks, Jerry. First and foremost, just like to acknowledge the traditional owners of the land we meet upon today, the Whadjuk Noongar people, and to also thank the organisers for the opportunity to present. I'm stepping in today on behalf of our Head of Exploration, Susan Hunt, and we'll be giving you an insight into Oz Minerals as a company, a bit of an introduction, also going through some of our exploration pipeline, as well as our studies and development pipeline, and a bit of a look at what we're currently doing at our operations at the moment in terms of expanding them and increasing their life. And towards the end, we will touch on West Musgrave, as it is now the next project in Oz's pipeline that's going to be based here in WA and hopefully moving towards a financial investment decision later this year. Okay, so Oz Minerals is a modern mining company. We're striving to be as modern as we can be going forward, with the purpose of really going beyond what's possible to make lives better. And this framework you see on the screen here is a very holistic approach to going about exploring and mining copper to meet the growing demand in the world at the moment. And we believe that success here really relies on creating value, not just for our employees and our shareholders, but crossing over to creating value for our suppliers, the communities we work in, and also the governments and jurisdictions in which we work under as well. Some distinction here is our approach is lean and agile, typically an approach you see in software development companies and in finance more recently, where we're able to adapt and change and do this with our suppliers and our communities as the circumstances in the world we operate changes. And we can see that in the recent years with the changes in terms of ESG requirements, even with the pandemic spreading around the world globally, this agile approach is required to overcome such disruptions to our business or to markets around the world. Another key distinction there is the devolved nature of our business. And what that means is essentially every asset or every project is devolved from the other, in that it can make decisions based on what is happening in the context of its own asset. That enables us to move through decisions quickly, avoid hierarchy, and potentially overcome challenges for those particular projects then and there on the spot. So a bit of a snapshot of what's happening for Oz around the globe. Currently, we have 2 operations, Prominent Hill and Carrapateena, which are probably well known for everyone in South Australia. We're also operating in Brazil out of our Carajás hub. Backing that is our development pipeline, where we have 6 developments on the go. Obviously, the most prominent ones for us from Australian perspective are their expansions at Carrapateena and Prominent Hill, but the forthcoming project at West Musgrave, which we're working to a high degree on this year, and also further projects in Carajás. Now, backing these is a further 16 exploration projects across Australia, Brazil, Sweden, and Peru. And these are really, the strategy here is focused around copper, also feeding in gold and obviously nickel from West Musgrave in the future. All these assets are long life with low operating costs in provinces where we think that we can build upon the initial investment in those provinces. And I'll give some examples around Prominent Hill and Carrapateena later on in regards to that. Taking a geographic look here across the 3 continents, the different projects and their phases. Here in Australia, up in Northern Europe, in Sweden with exploration, and then over in South America with our operating mine at Carajás, as well as the surrounding exploration in Brazil, as well as Peru. So we talk about pipelines, and we saw a nice image there of a nice pipeline wave. I consider this our rolling sets of these kind of waves coming through with Oz Minerals. Obviously, we've got some key provinces here in South Australia, hoping to open up another key province in West Musgrave and be looking to feed additional projects into these core assets, you might call them. So building the operation, expanding those operations with additional resources feeding into those, and exploration projects that feed into those projects. In Brazil, we have a hub approach. Carajás is the centre of that hub, and other exploration projects around that area feeding into that. And also, you can see there on the bottom of the slide there, our JV activities this year, entering into agreements for the Peak and Denison prospect, as well as exiting other agreements in Jericho, Eloise and Breena Plains. And both of those sort of activities are all focused on that strategy of making agile, quick decisions, using the data that we're collecting and constantly evolving our geological databases to be able to make those decisions. So looking more at that exploration strategy and going into that agile approach where we design, do, and then learn, and this is a cyclical approach through our exploration strategy. So at the core of that is our geological database, heavily data-driven, where we design future programs to either plug gaps or to explore that data further. What do these programs look like? Obviously, there's geophysical data, drilling data, geological data. This is the doing part of the process. We try and do that to then learn and feed back into that geological database, which we can then look at a conceptual model and then follow that process through. So what are we looking for in there? We're looking for high value copper in provinces which we know are going to have long lives and potentially feed into our existing assets, such as Prominent Hill, Carrapateena, and in the future, West Musgrave. For 2022, what do we have planned? Well, this is a bit of a look at the expenditure in relation to each other. Obviously, the key areas of expenditure are around existing operations and assets. That's represented by the stars there, the 1 and 2 stars, which highlight, number one, we're going for high value copper. And number two, we're doing that in key provinces around our key assets. So you can see their expenditure around Carrapateena and Prominent Hill to add to those existing resources, as well as in Carajás and in WA, further definition at West Musgrave, as well as further exploration work at Yarrie. If looking at that in terms of a percentage-wise, here we can see about a third across project generation and initial drill testing, and the remaining third split between targeting deposits and also follow-up testing there. Once again, the approach is backed by data, constantly evolving through that innovative loop where we're feeding and constantly learning about our geological models and then making decisions going forward based on that. Taking a look at some of our operations now and the near mine exploration work, as well as the expansion work going on. Prominent Hill, we announced expansion there with the Wirra mine shaft, approval to go ahead there. That is actually still open at depth. And there is also existing exploration potential along the east and west sides of the current open pit, which is looking to test those further to add to the Prominent Hill resource. At Carrapateena, the same story goes there. Building on that existing resource with further exploration work, looking at extending production and life of the asset through to 2045 through our Block Cave 1 and Block Cave 2 expansions going on there. Just some highlights of what happened in the past year there in terms of our underground crusher 2 progressing along, the Western Access Road completed, as well as establishing access to those block caves commencing in the final quarter of last year. So now there's a short video on West Musgrave, probably what a lot of people have been waiting for. I'll give some commentary as we go through. But as you can see, it's the next project in the pipeline for Oz Minerals. And this year we're looking at heading towards a financial investment decision in the second half. We're currently doing further exploration work there on other tenements in the surrounding the current Nebo and Babel resource. And so here you can see the location which we're working in outside of Warburton and Jamison in the Nanandurra lands, about 30 kilometres south. There's some history of the project here through being discovered by WMC and first explored by Cassini and then handed over to Oz Minerals. Strong commitment to working with the local community there in the Nanandurra lands. Oz Minerals has big aspirations as a company, but as a community and a people, they also have huge aspirations for not only themselves, but the next generation that are coming through in that community. We operate in an environment, a dry environment. So site at the moment, as you can see there, is a dry site on an Aboriginal reserve, about 150k west of the tri-state border. And here's a little deep dive into the current resource, Nebo and Babel. Some visuals here showing the indicated and inferred resource. Looking to produce 12 million tonnes per annum, nickel and copper. Here's a view of the entire project envelope. And at the moment, if you look in the northeast there, we're exploring another prospect called the Sukoth prospect. Drilling is currently taking place there with update later this year on Sukoth. So that's the West Musgrave project. A bit more of an update there, I guess. At the moment, we're finishing off late-stage exploration work, continuing to do further geophysical test work in the surrounding tenements as well, looking at that provincial potential with the understanding that we've got an existing resource there in Nebo Babel that we're looking to make a decision on there later this year in terms of a financial investment decision. And if all going well, we're looking at a construction period of about 2 years with a projected first ore in 2025. So that's the West Musgrave story. Thank you.
Coda Minerals is building a large copper cobalt and copper gold inventory at Elizabeth Creek in South Australia, turning exploration success into resources in a copper bull market. Chris Stevens is CEO and Executive Director, and he joins us with the Coda story. Welcome along, Chris.
Thank you very much, Jerry, and welcome to everyone and online and in the room as well. And thanks to Oz Minerals for the warm-up gig, a bit like following the Rolling Stones, I think. But we are, in our own way, very proud to be part of the South Australian story, and you couldn't really ask for better neighbours. We are situated very close. So we've been very busy since the last time I spoke at an RIU, and it's been a good year. Just as a bit of a sort of reminder of where we come from, we listed in October 2020, so just under a year and a half ago. I think it feels an enormous, a lot longer than that, to be quite frank. But in that time, we've gone from a couple of small contained copper, about 280,000 tonnes of contained copper, a sedimentary copper cobalt, through to delivering a resource just at the end of last year. Serious resource, 43 million tonnes at 1.84% copper equivalent. We've also been out exploring for the IOCG iron oxide copper gold mineralization, for which this region is so famous. And of course, Carrapateena probably being one of the most famous, about 40 k's to our east. And we've also been working at Cameron River, which is our projects in Queensland as well. So it has been an absolutely fantastic year, and really happy to be standing here sort of as the story is evolving, and talking to the next stages as well. So share price wise, we're about 3 times our listing price, taken a hit the last couple of days thanks to Mr. Putin, but generally very, very strong. Good cash balance, 14 million as at the last quarterly, around about 12.5 as I stand here today. So we can deliver on all of our strategic priorities with the cash that we've got. Obviously, we'll look over the year and make sure we keep this corporate structure really strong. Just 97.7 million shares on issue. However, we are now looking at we've just announced a transaction with our minority or junior JV partner, Elizabeth Creek, Torrens Mining. Torrens is a listed company on ASX, and we've announced a friendly off-market takeover to acquire Torrens for 0.23 new Coda shares for every 1 Torrens share held. And we've worked with Torrens for a very long time. This is a strong premium, about 30% premium to the recent share prices of Torrens. It is a friendly and supported transaction, and we really look forward to welcoming Torrens shareholders into the Coda family and the Coda share register. We have obviously some work to go. Bidder and target statements will be out in the next week or so. But what you will see here is a consolidation of Elizabeth Creek into 100% ownership. We currently have 70% with the right to go to 75%. And look, we work really, really hard. We really care about this project. The Torrens people are fantastic as well. We've worked together for a long time, and for Torrens shareholders, what I will say is we will work very, very hard for you as well. So the indicative market capitalization post transaction would be 109 million. I personally think there will likely be a partial re-rate from that because you always get a bit of a discount if you're in a JV. So Torrens shareholders should look forward to that sort of minority discount being removed, and the whole thing should be value accretive. So that's been really great news. It's a really strong board. I'll leave you to read this in your own time. But what I will say is they work, me and our team, very, very hard. They support us very, very well. And it's, I think, one of the best boards you'll see in junior mining. These are people who have done it before, and we're working to build a very strong company. So I talked a little bit about mineralization at Elizabeth Creek. There are two forms of mineralization on the tenure. The first is a sedimentary copper cobalt. We sometimes refer to it as Zambian style. It's not in Zambia, it's in South Australia, but it is most analogous to some of the Zambian copper cobalt that you see, and also to the Kufa-Schäfer in Central Europe as well. The second form of mineralization for which the area is very famous is the IOCG, and we have now verified IOCG, both potential and also now an IOCG discovery. So in terms of the next steps, really we've delivered on the resource. I'll talk about that, the resource at Emmy Bluff. We've delivered on the expansion of the Emmy Bluff Deeps IOCG discovery. We are now working through studies on the sedimentary copper. They're well advanced. We've just hired a fantastic study manager. The processing studies have been going on for, frankly, years now as we've been sort of working on this project and progressing very well. And we're working through mining studies, and we expect to get a scoping study out in the mid part of this year. The IOCG strategy is fairly simple. We keep drilling, we keep following these mineralized intercepts, and we see how far this thing goes, because given how much copper we're finding in, I believe it goes a lot further, and there's a big part of this story to continue to tell. We also will test our second target, which is the Elaine IOCG. Now, I always make the same mistake. I spend hours talking about these slides on the IOCG, and then I don't leave enough room for the rest, which is a very exciting part of the story. So I'm going to do a quick recap. In June, we hit about 200 meters of alteration, about 45 meters of IOCG mineralization. Yes, it's deep, but the grades are very strong. You know, we're seeing classic IOCG zonation. That's zonation from pyrite to chalcopyrite to bornite. We're seeing bornite trends, and we have conservatively stepped out. Now, we can debate that strategy, but what we have done is understand the trends. When you're looking for IOCGs, these tend not to be laterally extensive, although this one is actually starting to look that way. And it can be a challenging sort of as you continue to drill through this. I will remind people in the room, Carapatina hit that fantastic, the fantastic first intercept. It's about 167 meters, I think, in CAR2, but it took till about CAR50 to really understand what was going on with that resource. We don't think Emmy Bluff Deeps is going to take that long, largely because we've got the advantage of these geophysical anomalies and some historical drilling. So we're working through this, but we just, as you can see here, starting to really expand. So EBD4, which is currently unannounced, we're just working through the logging of that, but that will extend the mineralization, if mineralized, by over 250 meters from the nearest mineralization. So this is a reasonably big cool going that far. 380 meters from north to south, as you can see from sort of EBD 18 down to the EBD 3 wedge. And I'm sorry how hard this is to read, but you sort of get an overall image here. And EBD 4 and EBD 6 really looking to materially extend that mineralization. We think we've got a pretty good handle on what's going on here now. We're seeing major sort of structures in the basement, in the geophysics. We've found a major fault coming through this bornite zone. We have a lot of questions yet to answer. EBD 2W4, which was this hole that you can see just above that sort of black circle there, oval, was a hole that I wasn't too keen on drilling. Now, that turned out to be a 90+ meter intercept. So the assays are out, we're waiting for the assays. The assay turnaround is taking some time. So what I will say here is watch this space. We've started to step out. We're seeing significant, or certainly hope to see as we continue so far what we've seen, significant increase in the lateral extent of this mineralization. We'll continue to drill right down to the southeastern tip of this anomaly. As I say, there's a lot of questions. Sort of appreciate some patience as we work through this, but we've got 2 drill rigs running 24/7. This is potentially a very large IOCG ore body, but we do have a lot of questions still to answer on this. So it's exciting. It's thrilling. It's non-stop. It's a 24-hour-a-day endeavor, really. But we're very excited by what we're seeing here. Elaine, I keep bringing this up and I keep promising to drill it. We will be drilling it this financial year. We are working through sort of all the preparations for that. This is another target. We've proven our exploration model. Watch this space on Elaine. Now, this leaves me with a bit more time than usual, which is fantastic, to talk to the sedimentary copper, the sometimes referred to as Zambian copper, the copper cobalt. We started off with 2 pre-JORC resources. We drilled these up to JORC indicated. These are MG14 and Windabout. And then we went looking for more sources of mineralization, more potential sources of ore. We looked to some historical drilling that when they drilled down to the basement, they'd discovered this sort of strange copper cobalt mineralization at about 400 meters, flat lying, sitting there between an unconformity between 2 sandstones. And we started to ask questions about what this can be. Well, we've partially answered that question now. 43 million tons, 1.3% copper. The cobalt is in Carolite. It is relatively simple to process. It's certainly something that we believe at the current time we can deliver a saleable cobalt sulfate product from. And we are, again, working through those feasibility studies. But just to dwell on the resource for a minute, I was talking for the last year about a large peer comparable resource. Well, I'll direct you towards the Shaw and Partners independent coverage on this, looking at that peer comparable. We certainly told the truth on that. This is more than peer comparable. We're very excited about this. I'm sort of feasibility and modeling specialist by background. This is right in our wheelhouse. This is something that we're really enjoying working through, and we are excited. We're going into a major copper bull market. This is starting to look very, very exciting. So 43 million tons at Emmy Bluff, 1.1 million tons contained cobalt of copper. Try that again. 1.1 million tons of contained copper equivalent across the tenure in this sedimentary copper cobalt. So this is excluding the IOCG as well. If you're not excited about this, and I understand some shareholders are very focused on the IOCG, and I am also very excited about that, but you should also be excited about this because this, in my opinion, is real. This is coming. We're working through it. As I say, we've hired a fantastic study manager. We're advancing very well on this, and we're very excited. So what else is there out there? Well, we've had, we worked through some active seismic, which turned out to be a great help when we put the resource together. We've also, we believe, identified a potential second basin to the east. This is Emmy East. We will be drilling this very shortly. We're literally just organizing drill rigs as we speak. Is there another Emmy Bluff out there? Well, what I will say is this towards the north, that northeastern drill hole is, I believe, the second best, certainly one of the best drill intercepts in the entire deposit. We have identified additional Tapley, which is the host mineralization out to the east, and we're pretty excited. So we'll be out drilling this as well. With 43 million tons at 1.84% copper equivalent, you don't necessarily need more, but it's always good to have. Just this is a reminder, this office presentation is online as well. Windabout and MG14, the existing resources. So the path to a re-rate, I said we're undervalued. Shaw and Partners coverage would certainly seem to independently agree with that. What do we need to do to get that re-rate? Well, first, I think we need to continue expanding the IOCG. That's a given. We've got 2 drill rigs turning 24/7. And I think we really need to prove that this sedimentary copper is real, can be mined, can be processed, and we're very advanced in that process. I know what's going on. I'm excited. I'm looking forward to presenting it in a JORC compliant manner, in a proper scoping study towards the midpoint of this year as we expand that. Now, I'm just going to talk very quickly. There's about 2 minutes left. Appreciate I'm talking very quickly as well. There's a lot to get through. Cameron River, again, I usually end up running out of time before I get to this, but this is starting to look really exciting as we work through it. This is a staged farming up to 80%. We have a great partner on the project, and we've been out there doing primarily rock chips and soil samples, and I know everyone groans rock chips, who cares? 22, 23% rock chips in this part of the world aren't that difficult to find in truth. But when they come with coincident geochem and geophysics, that's when we start to get excited. And I'm hoping this little fly through works. Yes, it's working. And we've identified new targets through VTEM. So what I want you to watch here is this large red dot in the center that appears a little way into it and keeps going. As you run through this VTEM slice, it's really a measurement of sort of partially depth and also how much sort of signal this is kicking back out of the ground. And when you see this sort of thing, this is when you start to get excited. With recent significant successes in this part of the world, with Carnaby and our friends Hammer Metals just around the corner from this tenure as well, you can see that this part of the world really does deliver. Got to take this from rock chips, geochem and geophysics to drilling. We're looking to be drilling that, as you can see on this timeline here, very shortly. And again, it doesn't get enough airplay, which is why I have sort of on purpose given a bit more time today. But again, you can see here, I've said it before, I'm going to say it again for the next 10 years. Those companies that explore more, find more. If you put that together with what we believe to be careful governance and smart corporate management, that is when you start to build a real company. ESG compliance, I'm not sure I like the word compliance, it's more of a passion for us. We believe very strongly in the future of green energy. I'm a proud EV driver. If you don't like them, drive one, they're awesome. When you live here, you kind of forget just that the world, how fast the world is changing out there. But, you know, personal politics aside, this is happening. Copper has a very inelastic supply curve. All copper projects are challenging. And we believe we have a fantastic set of projects that we're building resources. We have great relationships with the traditional owners, and this is an important thing to be doing. So why invest in Coda? Just to summarize, we've got an ambitious ongoing program. We've got multiple rigs. We've got multiple targets. We've got a strong cash balance, 14 million as at the end of the last quarterly, and a very, very passionate board and team. So with that, thank you very much.
Chesser Resources has discovered 2 high-grade gold projects at its flagship Diamba Sud project in eastern Senegal. Managing Director and CEO Andrew Grove joins us to tell us more about the developing Chesser story. Andrew.
Thanks, Jerry, and hopefully we'll get through this before everyone falls asleep in the last throes of the conference. So, Chesser, we're in eastern Senegal. The main project and the main focus today has been the Diamba Sud project, as you can see, near the border of Mali, sitting on Senegal-Mali shear zone type rocks, structures, world-class sort of tier 1 projects that are just over the side of the border, Lulu, Gonkodo and Fekola. We've made multiple discoveries in a very short period of time. We've delivered our maiden resource estimate in November last year over the Area A and Area D deposits. It's got a lot of attributes that should see a lot of conversion into a potential mining reserve. In December, we made a new discovery. That's about 1.2 kilometres south west of the resource area, and we'll have a look at that. And we're drilling that now. We've got a scoping study well and truly underway. We should deliver that next month. And we've got some other exploration tenements in the country, and some of those other applications we're hoping to get granted in the near term. So if we look at company overview, well guided in country by our exploration manager, Gareth, and our West African corporate director, Boubacar, who was intimately involved in the licensing approvals and running of Mako gold mine in country. Boards will govern by Mark, who's West African stalwart, and has lots and lots of experience in West Africa and building and commercialising assets. We finished the year with about $5.5 million in cash. Market cap's a little bit higher now, about $50 million. Share price performance hasn't been the world's best, but we've been labouring under a an exit by a large North American fund over the last 6 or 7 months, and they have finally finished selling at the end of early last week, actually. So while it's not great, it resets the base for potential new investors, and we think it's oversold, and we've got lots of news flow to demonstrate the value of our project going forward. We have a look in at the project. That's a brightly coloured image. Quite in 2017, there wasn't much exploration. We did some auger geochemistry. Soils don't work in this area. There's extensive laterite cap. The auger anomalism, defined fairly extensive gold anomalism over a fairly large area of our tenement. Subsequently, Warrick did the same in their tenement, which was immediately to the east of ours and adjacent to the border, which is the river there, and you can see the proximity to Gonkoto, which is also a Warrick mine. And what that defined is a 15 by 15 kilometre anomalous gold geochemical footprint, which hasn't been explored properly for forever. So most of this drilling that you see up here is less than 2.5 years old. So structurally it's quite complicated, but there's a lot of mineralisation starting to come out of here in a very short period of time. Particularly, if you look at next door, Warrick, the KB West prospect, they've declared that as emerging discovery. Gold, high-grade gold over a kilometre and down, open at dip and down plunge, and they're actively exploring that at the moment. And we have a good cooperation with our neighbours, and we share data and look at each other's core and things like that, try to nut out the structures. But in any event, we identified some really high-grade mineralisation oxide at Area D mid-2020. Focus has been on that. We've delivered that resource in November. And then we've started, late in the year, we stepped out and started looking at some of these other anomalies, and luckily sort of found some pretty extensive mineralisation at Area H, and we've defined high-grade mineralisation over 125 metres, open along striking out depth. And as we said, the drilling program we're commencing there. So that started last week. So should start seeing some pretty strong results come out of there starting at the beginning of next quarter. So just quickly have a look at Area H. That's the plan. You can see the tenor and grade of that mineralisation. It's located in a wedge of calcareous sediments between granites. To the south is an extensive historical artisanal area of 100 by 100 metres, which we're bulldozing at the moment to get safe access to the drill rigs. The best intercepts to the north actually lie outside the geochemical anomaly. That could be anything at this stage. The average intercept widths grades are about 3.5 grams per tonne. So clearly that's going to add to our current resource base. The drilling here will be aimed to include that in the resource base this year. And the 15 to 20,000 metre program that's underway will expand resources here, expand resources around the current resource area, test some of the structural interpretation of plunging north shoots at Area A, and test a couple of little anomalies. The resource, it's 780,000 ounces, but importantly, it's got a lot of attributes that are positive. We're quite lucky. Area D is a shallow oxide blanket with a really high-grade core. That starts at 10 metres from surface, so that'll drive some pretty strong economics. At 1,800 and reported above 0.5 gram is the 781,000 ounces, but importantly, there's some pretty high-grade and continuous high-grade components to this resource. So if you increase the cutoff to 0.8, you've got nearly 700,000 ounces at 2, and if you increase the cutoff to 1.5, you've got nearly 500,000 ounces at 3. But as you can see, these red blocks here are the plus 2 gram blocks, and they form two very high, big blobs of contiguous high-grade mineralisation, which you don't see. So we've got a lot of confidence in the resource. The main portion of the resources are drilled out by 25 by 25, and 70% of the resources are classified as indicated. And we think a lot of this will convert into a future mining reserve. The scoping study will help demonstrate that. But as an example, within a 1,500 shell, 700, nearly 40,000 ounces, those resource ounces go in there to nearly 3-to-1 strip ratio. That's 95% of the ounces are within 135 metres of surface. So, this is a resource that when we're lucky in the geometry and the grades that this is mostly will convert into a future mining inventory. And we think there's pretty good prospects of expanding the margins of this resource and potentially at depth or repeats the structures as we better understand the mineralization. So scoping studies underway with the attributes of the resource we've sort of talked about, that we think there will be a very, very strong conversion into a very profitable potential mining operation. Metallurgy, we've done a reasonable amount of metallurgy on both the oxide and the fresh. Average 96% recoveries, rapid leach kinetics, no deleterious elements. So it really leads itself to a sort of standard CIL processing circuit. In terms of execution, there's not very much standing in the way of building a mine on this site. As you can see in the image there, there's no villages, there's no artisanal activities, very little land use. We're within 5 kilometres of the national highway that connects Senegal and Mali, so there's lots of commerce going through there. We're 7 kilometres away from the river, so there's water sources, and we're supportive local community and jurisdiction. So we've commenced environment ESIA baseline work, so getting ourselves in a position in the next 18 months or so that we can apply for a mining licence or an exploitation permit as it is in Senegal. We'll just quickly go through the different resource areas and we'll talk a little bit more about some stuff. But Area D, is typified by this really supergene blanket with this really high-grade core that looks like a heart up there. It starts at 10 metres from surface and it's 20 to 40 metres thick, 3 to 10 grams per tonne. And you can see by the sections that it is really, really continuous. The geostats behave themselves exceptionally well here. Underneath this in the fresh, as in Area A, is mineralisations intimately related to calcareous carbonate sequences. We get high-grade mineralisation developed over fairly extensive lengths where it intersects a structure or potentially fold nose. We've had a structural review undertaken late last year. They come up with a sort of a fold nose targeting model that says that these high-grade mineralisation is dipping to the north beyond underneath the drilling. So part of this current drill program will include some very deep drilling fences across to the north to sort of test that model, while we also expand the resources in areas where they're open locally in and around the current resource. Structurally complicated. It's we clearly can see that there's a plus a million ounce sort of potential mining inventory here that we're going to work to develop and demonstrate this year with this current drill program. Potentially the area has potential for multi-million ounce. Obviously, some case from Goncodo and Warrick's very, very excited about that. But it is complicated, so we will need a lot more work and understanding to sort of find the next exponential growth. But at the very minimum, we've got a very viable project and future mine development on this site. If we have a look a little bit more, this sort of image is a bit small, but it's the ground array IP. We've identified 10 exploration targets. The little black dots on the screen are our RC and diamond drilling. So outside of A and D and now resource area H, which we're renaming Karakara, which sort of means laterite in the local dialect, there's very little drilling. We've hardly tested all the geochem targets. So there's a lot of prospectivity here. It's in a very fertile rock sequence. It's generated very, very big mines across the road in Mali, so there's no reason to believe that we won't actually continue to find things over the longer term here. This is just a compilation of sort of Warrick's work over the last 2 years. They've been reporting on this every quarter for the last 2 years, which is unusual for a standalone exploration program for Warrick. KB West has been their main focus. They classified it as an emerging discovery last quarter. Their quarterly came out last night. So they've announced that they've got the block immediately south of Diamba Sud, which they happened to drop recently, and it was picked up by a local community company, and they've rebought it. So they're committed to the area, and their understanding of the prospectivity has changed, and it's largely driven by the work we've been doing and the success we've been having. But you can see the red blobs of their geochem, auger geochem anomalism. That's a pretty extensive system with very extensive sort of drill, starting to develop some really high-grade drill results over very large areas, tie it together. You know, we're both sort of struggling a bit in terms of tying together the structural architecture a little bit. But that's sort of good and bad. It's good for finding more ore bodies, but it's hard to articulate to the market that, you know, it's multi-million ounces. But look, our view is there's at least 1 million ounces in our project that we can clearly demonstrate and we'll clearly get to this year. That's a 10-year mining operation, 100,000 ounces. We're currently capped at $50 million. So look, there's lots of upside to be had in Chesser. And, you know, in reality, if Barrick find a Barrick scale project, then they're going to come in and swallow, you know, consolidate the area, and at least we'll have a benchmark in terms of valuation and optionality for our shareholders with the scoping study and resource growth that we can show. Yeah, so basic summary, we've said most of this stuff. Maiden resource, 781,000 ounces, but it's a high grade, near surface, eminently convertible into a reserve. New discovery, so the resources are clearly going to grow, not just incrementally around the mineralization we've defined, but with the new discovery. Highly prospective terrain, anything could be found here, and it's just going to take time and work to bring it about. We've got an active exploration program, so we've commenced at 15 to 20,000 metres. That's focused on bringing H into the resource base, expanding area in A and D, testing some of the physical structural targets, and testing a couple of the high priority targets. But there's plenty more to be tested over time. And we clearly think there's a development opportunity on this site. I think the scoping study, which comes out next month, will have a fairly significant gap between valuation of our current market cap and where that will come out. You know, thinking if at 1,500 you get 740,000 ounces going into that shell, then that's sort of the scale of of where the scoping study is going to come out. Should be low cost because of low strip ratio, good metallurgy, all that sort of thing. So, and we're growing the resource, so it's going to get bigger. You know, we clearly think it's plus 1 million ounces, and we're going to work this year to sort of demonstrate that. But it, you know, potentially can be bigger. So there's a big value proposition in Chesser, we believe. A bit oversold with the major shareholders exiting, funds exiting. That stopped. Gold price is moving in the right direction for everybody, and we've got a really strong news flow with the scoping study and then subsequent drill results, starting at, you know, the high grade discovery at Area H. So thank you.
Now I have a pair of glasses at the registration desk, and we also have those Mercedes keys. So somebody's got a Mercedes, but they don't have their keys. They've probably called the missus and asked her to drive over the other Mercedes so that he could get home. That's just me surmising what's happened. OzAurum Resources is an ASX-listed company exploring for gold across its 2 advanced 100% owned gold projects located in a plus 30 million ounce gold district in the heart of the WA Eastern Goldfields, 130 kilometres northeast of Kalgoorlie. Andrew Pumphrey, CEO and Managing Director, takes up the story. Welcome, Andrew.
Yeah, thanks for the opportunity to present today, and excellent conference, and really pleased to be here. Usual disclaimer. So OzAurum Resources, we're a new IPO. We listed this time last year. We've got 2 advanced gold projects in WA, Mulgabby North and Patricia. They're both situated northeast of Kalgoorlie. Mulgabby North, we've been RC drilling there along an 8-kilometre strike length there on the relief shear. And we've got some significant results over one area of about 1.3 kilometres long. We've also been undertaking a lot of air core drilling there over a 4-kilometre strike. And that's provided a lot of opportunities for us for future targeting for our RC drilling, which I'll go through shortly. That project's right alongside their Northern Star Carosue Dam operation. And look, it's had limited historical exploration. It's been privately held for 30 years, and we're currently exploring under transported cover there. So the other project is Patricia. That's a high-grade gold project. Historically, it was about 40 grams a tonne as an underground mine. It was mined as an open pit in the 1980s. We've been doing quite a lot of RC drilling there. It's open at depth, getting some really good grades up to 90 grams a tonne there. And again, it's been privately held for over 30 years, so it's had limited historical exploration. On the corporate structure and team, we've got 114 million shares on issue, a bit over $4 million in the bank. Our share price has been hovering between 12 and 14 cents at the moment, so we think it's a value buying proposition for incoming shareholders. Majority of shares are held by the founders, so it's quite a tight share registry. Directors and management, Jeff Williams is a mining engineer. He leads the company. He's well known. He's been involved in a number of projects that have been quite successful in the past, and the rest of the board have quite a strong mining background and exploration background. So as we're in a strategic location, we're in this 30 million ounce gold district northeast of Kalgoorlie. It's basically eastern Norseman Wiluna Greenstone Belt. There's two major structural corridors there, the Keith-Kilkenny and Laban and tectonic zones. And basically where both projects sit in either of those zones. We neighbour a number of existing mining operations and gold processing plants in the area. To the north, we've got Sunrise Dam, and then we've got Carosue Dam alongside Mulgabby. Look, we've been working in the area for a long time, so there's a lot of long-standing relationships with particularly the traditional owners, etc., that we've built up over the years. So that's sort of helped us a lot to sort of get on the ground and start working very quickly. We've been very aggressive with our drilling campaign. We've done over 80,000 metres of drilling in the first year of the IPO. So it's been both RC and air core drilling. Split up, it's about 30,000 metres of RC and well over 40,000 metres of air core drilling. And that's been focused on both our key projects, which are Mulgabby North and Patricia. And look, we've intersected significant gold mineralisation in both our RC and air core drilling, which I'll go through in a minute. And of particular interest is a widespread gold mineralisation that we're seeing in our Mulgabby North air core drilling. And that's sort of basically allowed us to generate a lot of targets for our future RC drilling. Another thing that we've done is we've built up an extensive drill hole database, and that's taken a few years to put together. So we've integrated all the historical open file data from all the Carosue Dam deposits. And so we've got a really good understanding of the geology of the area, which I think is really important when you're coming into these areas. Obviously, we're using all the latest modern exploration techniques. So we've done some gravity surveys. We've done some close-space drone magnetics. We're doing hyperspectral analysis and bottom of whole rock geochemistry. And I'm a very big believer high quality technical geology is the key to unlocking, the potential of both these projects. So drilling down on the Mulgabby North project, it's 100% owned. There's no royalties in this project. It's very clean. We've got granted tenure in the form of a main mining lease there. We're basically exploring 8 kilometres of strike along the relief shear, and it's adjacent to the Northern Star Carosue Dam mine. On the Northern Star projects, they're all sitting in what we call the Carosue Dam Basin. So we've got 2 main mining operations that they're working on at the moment. It's Whirling Dervish and Karari. And it's about 3.5 million ounces between the two of them. They've got quite small footprints. They're only 700 or 800 metres long in strike, and they're under about 20 or 30 metres of cover. And I guess like those mines are situated on the western side of the Carosue Basin, and that's a sin form. So we're sitting on the eastern side of the same basin. And we're very close to those operations. So on the Mulgabby North, it was previously very underexplored. As I said, it's been held privately. There's been no other, on the main mining lease, there's been no other companies do any drilling on that project for over 30 years, other than myself. And look, we've got 20 or 30 metres of transported cover there, and that's prevented historical discovery. So, and we're generating a lot of new targets for RC drill testing. Basically, mineralisation is open at depth and along strike. And look, I believe that Mulgabby North is all the hallmarks of a potential for significant gold discovery. And just looking at some of our drilling results, we put in over 25,000 metres of drilling there. And we've had some excellent results from our RC. We've got some high grade numbers there, up to 10 metres at 4.6 grams. We're also seeing wider intervals of, reasonable grades of 40 metres a gram, and that sort of equates to probably a true width of about 30 metres. And we're also seeing this new primary gold mineralisation on the western side. So this is all along the relief shear, and that's a magnetic image on the side there that, and there's a significant demag zone that we've got there that we're really excited about at the moment. Our air core drilling, we've drilled basically all the way down the relief shear, and we've got some excellent results in this area here that haven't been drilled before. And that's a demag zone. This is a mag high structure that's coming down, and magnetic destruction is normally typically sort of associated with hydrothermal alteration to the system. So we're sort of fairly confident when we start RC drill testing that we're going to come up with some numbers. So just looking at the air core drilling we've done, obviously we've done a lot of air core drilling, but really that's enabled us to build up a data set that we can work with, and that's generated a lot of new targets. So we've done that sort of foundation drilling last year, and that's now really given us the opportunity this year to really focus our drilling. And look, we're getting a lot of significant saprolite hosted gold mineralisation. Those 3 holes at the top with the 4 metres at 1.47 and 4 at 2 and 4 at 1.68 are all in that demag zone. We only just drilled them late last year. And we've also got a number of holes that ended in gold mineralisation. That's always very exciting as a RC target. So we'll be following them up. And we've also seen high-grade paleo channel gold mineralisation. And we've been getting some really high grades out of that. And my sort of favourite saying is if gold doesn't drop out of the sky, it's come from somewhere. There's a few theories about the Paleo channel, but it will help us to understand the primary gold mineralisation. Some of these Paleo channels, we've mapped the Paleo channel now, basically all the way down from basically here all the way down. So it's over probably a 3.5 kilometre long Paleo channel. And we'll be doing more work on that this year to follow that up and see what that comes up with. So in sort of, I suppose in summary, we're seeing that widespread gold mineralisation at Mulgabby North. That's a gravity image behind us. That's a 4 kilometre long zone. And basically we're situated in a gravity low corridor, and these light coloured cells are basically the gravity low. And that gravity low trough is pretty well exactly the same as what they see over at Carosue Dam. So we're pretty excited about extending that gravity this year further to the south and see how far that trend continues. We've just completed our bottom of a hole air core geochemical classification. So that's enabled us to sort of accurately identify the rock types, and it has confirmed that we are in the same stratigraphy as Carosue Dam. We're seeing these felsic to intermediate host rocks. What we do see is extensive sericite alteration right along that shear, and we are seeing hematite alteration in some areas. Also, we've intersected a number of intrusive porphyries in our latest RC drilling. So we want to follow that up with diamond drilling to actually see what they look like, look at those contact relationships. The other thing we're doing, which is critical, is the fault interpretation. It's been taking us a while to get this sorted out because it's a bit problematic how we interpret the location of these faults. But we know all those Northern Star Carosue Dam deposits all occur on north-south faults and cross faults. We actually think we've got a couple of north-south faults through here. You can sort of see them in our gravity. So we'll be doing more drilling, trying to drill right on those sort of where those cross faults cross our main shear, and we'll expect we'll get high grade mineralisation in those locations. So we're really excited to test that. So what are we doing at Mulgabby North for the next 6 months? We're going to do over 7,000 metres of RC. So I'm really keen to target this 500 metres of strike in this DMAG zone I've talked about before. We're going to do 2,000 metres of diamond. We'll be targeting our depth extensions of our existing prospects and chasing these cross faults. And we'll also be doing 5,000 metres of air core. We'll be extending our, along the relief shear, I guess, immediately to the south, testing for extensions of mineralisation there. Just moving on to Patricia. So that's a high-grade gold project. Again, it's 100% owned by OzAurum. It's on a granted mining lease. There's no royalties. It's a historic open pit. It was 800 metres long. It was mined in the late 80s. It was an underground mining operation prior to that. The produced a head grade of over 40 grams of a tonne. We're targeting that high grade mineralisation at depth. There's very few holes there which are below 250 metres vertical depth. So that's located on a 10 to 15 degree flexure in the stratigraphy, and there's a sort of a bend. And oh, she was wrong one. Yeah, there's a bend there. Basically, it's a flexure, and that's a classic structural sort of location to find a decent gold deposit. And what's really interesting there is we've got a 1 kilometre long porphyry intrusion, intrudes into the side of that open pit of a sequence there. Again, on that one, exploration has been limited over the last probably 30 years because it's been privately held. And yeah, we're sort of looking forward to getting stuck into that with the diamond drilling. Just some of the RC drilling results we've been getting there, some excellent grades and widths. It is very structurally complex. There's a lot of late stage faulting on that one. And basically our work going forward there will be to do the diamond drilling to try and resolve that structural complexity. And I always sort of say to our junior geos and people that don't do a lot of this sort of work, is like putting a big jigsaw puzzle together. You throw a 1,000-piece jigsaw puzzle on the ground, you've got to try and put it together. So you start putting the sides together and pulling together, and that's a bit like when we start our diamond drilling. It'll just be a case of, as we do that systematic drilling and piece together stratigraphy, I think will make a lot of sense of this particular project. So obviously we're targeting that high-grade extensions at depth. We'll need to twin some of these existing RC holes so we can actually look at the core and see what these quartz veins and this mineralisation is doing. So yeah, really excited to get that happening. So on the timeline, I think probably been over this anyway. So we've got that 15,000 metres of drilling planned at Mulgabby North and Patricia. So we'll be air core drilling shortly. The RC rig starts again next week. So the diamond drilling again, we'll be starting on that in the next sort of month or so at both our prospects. And again, down at Patricia, we want to get that structural interpretation done and really start to understand that project a lot better. So there'll be a lot of news flow going forward. So I'm looking forward to keeping on informed. So thanks very much for the opportunity to present today.
Initially studying geology in the Netherlands, Hilke Dalstra joined the UWA Key Centre in 1991 after completion of his PhD in arcane lode gold deposits. He commenced what would prove to be a long-lasting association with Rio Tinto, joining as a geologist with the Hammersley Iron Resource Task Force. He was involved in the search and ultimately successful discovery of several bedded and transported iron deposits in the Pilbara. He joins us now with the story. Welcome, Hilke.
Thank you very much. I hope there's still a few geologists in the room, so this will be mainly a geological presentation. Before I start, I have to acknowledge my co-authors there, and of course I have to acknowledge the entire WINU discovery team. Discoveries always take a team effort, and the enthusiasm and the efforts of this team were actually instrumental in discovering and giving the maiden resource that we knew. So where are we? We're in the Great Sandy Desert of Western Australia, about 120 kilometers or 100 kilometers north of Telfer. It's a pretty tough area to work. Like we have temperatures up to 50 degrees in summer. And in winter, in summer, we also have the tropical cyclone. So it's not an easy area. It's very remote as well. Briefly, the exploration history, the area was pretty well unexplored until the early 1990s. There was just only some work by oil and gas companies who did seismic surveys over the northern part of the Yanina Basin. Only in the early 1990s, we got a wide-spaced air core program drilled by BHP. And then there was from then on, there was some targeted exploration efforts by smaller companies. And this led to the discovery of the Calibre gold deposit by Antipa and the Magnum gold deposit by Antipa. Rio Tinto entered the JV with Antipa in October 2015. And this was basically our entrance into the area. This is just the timeline of the discovery. So as I said before, the entrance of Rio Tinto in the Citadel joint venture with Antipa. And then in parallel to that, Rio Tinto did basically a regional target generation effort over the entire Yanina Basin, northern Yanina Basin. And this led to the identification of a number of extra targets. We applied for tenements over these targets. They were granted in 2017. We did some additional geophysics over these targets. Did an additional airborne EM surveys. And after grant, we did the drilling at the end of 2017. And here we see geologist Jennifer McGuire, who actually ran the program. And she's actually standing near the discovery hole. The first drill hole on the target, the Tembo target, we call that, was immediately the discovery hole. So after that discovery hole, of course, there was a lot of effort to build a large exploration camp. So brought in a lot of equipment in 2018. And also parallel to that, of course, we did additional drilling, and that led to the discovery of a satellite ore body, which we called Nepagara, somewhere in 2018. And after that, of course, we had an extensive program of resource drilling, and that led to a maiden resource announcement in 2020. Just some pictures of the camp. So this is probably somewhere in 2020. The core facilities now are probably pretty much full. That's the drilling area there, the overview of the drilling area with the camp in the background, some drill rigs, core facility, core logging facilities, and the drill rigs at the demo bit, I think in 2019. Just quickly about the geology of the northern Yanina Basin. So we all know, went too far. We all know the area around Telford, that's the outcropping part of the province. So all of this area is undercover. So Winu is actually sitting under a couple of, under about 50 or 60 meters of Permian cover. And we can see it's sort of sitting between a number of granites and close to the edge of this Proterozoic outlier, which we call the Anketel Shelf. And basically this entire area is covered by Permian sediments, later sediments. So the area was completely blind to any other surface exploration techniques. So we basically have the same stratigraphy that we have in Telfer, although there are slightly differences, but overall we have the same rock types, same granite types that we have around Telfer. And of course we have this sub-basin, this Permian sub-basin. So we probably have a long-lived fault structure on the edge of that, and Winu is close to that fault structure. Just a little bit about the work up to 2016 and up to basically up to late 2021. This is showing the drilling at the end of 2021. So this was the situation in 2016. We have the initial Matembo targets, what we call Matembo targets. These are the last BHP air core holes on their regional air core lines. None of these holes actually went through the cover. So that's probably why they didn't continue them across to the west. If they would have continued, they probably would have been pretty close to it. And this is the drilling in the end of 2021. So basically showing the outlines of the drilling. Drilling is a bit constrained to the north and to the south, and that's basically because of the dune fields, because the dune fields are restricting our drilling a little bit. They're heritage, sort of important for heritage reasons. So we got to be careful to not disturb the dune fields. And that's the initial cleared drill pads in 2017. Just quickly talking about the geology. So in Winu, the geology, the host rocks are quite monotonous. So all our geology is basically, all our stratigraphic subdivision is based on geochemistry. So we've identified a number of different sandstone units on the basis of geochemical differences. It's very hard to log these separately. So we basically identified them on the basis of geochem. And if you do that, you can see that we're in an anticlinal structure with a fairly steep dipping western limb and a fairly gently dipping eastern limb. And we got sort of refolding by the Patterson orogeny, so we're basically getting a sort of a domal or half domal structure. And if you overlay the gold and the copper on that structure, we can see that we've got two major gold trends. We've got a north-south trending gold trend on the western flank of the anticline, with a series of on-echelon lodes. And then we have a strong east-west trending gold trend going towards this Napagara satellite deposit. And yeah, both of these are defined by lots of little different individual veins, mineralized vein systems. The copper trend is slightly different. So we have the strong north trending copper trend, but we don't have the strong east-west trending trend that we have in the copper. In the gold, that we don't have that in the copper. So these are still sort of north trending copper lodes. So we've got two different systems, more or less. We've got a gold system, which is probably overprinted by a copper system. Looking at cross sections, we can see the gold distribution, particularly relatively high in the top of the deposit and dying out a little bit to the bottom. Bit of structural control, stratigraphic control, and it becomes clearer when you look at the second. Probably show the. Oh. So that's the second cross section. When we have that second cross section, we can actually start to see a bit more stratigraphic control on the gold, and it starts to look a bit like Telfer actually, although this is still a vein style deposit, but we're seeing quite a bit of a stratigraphic control in the copper. It's still a vein hosted system, but certainly the rocks put some control on it. If you then look at the copper. So the copper is at surface as well, but it continues much stronger to the depth. And at depth, we have actually some quite good intercepts. So the system is still open at depth. Still actually open up a little bit to the south as well. So, also in this second section, we see that where we had the strong gold trend parallel to the bedding, the copper trend is basically not there. So we got clearly two different controls on gold and copper. Just quickly talk about the vein styling at Winu. So we tend to have quite early quartz and K feldspar rich veins. So our early veins are generally K feldspar rich. They can be either mineralized, they can be barren. People have called these sort of transitional magmatic hydrothermal veins, pegmatitic or whatever. You could call them whatever you want, but they look like they sort of transitional magmatic to hydrothermal system. Our main style of veining is quartz sulfide rich. So we have quartz veins with chalcopyrite, pyrite. Alteration can be quite variable. So we have K feldspar alteration here at the top, going into biotite alteration on the same vein, often controlled by host rock. Distal sericite alteration. We also have very gold-rich veins, which generally have a lot of bismuth associated with them. So here we have a mineral called it's probably bismuthenite or a native bismuth. And generally, when we have the gold is generally associated with the bismuth. These veins generally don't have that much sulfide, so we tend to have gold-rich veins with lesser sulfide. And the veins generally, there's another main style sort of vein here, and all these veins basically show some degree of brecciation. And when we have a lot of brecciation, we actually form these large breccias. So here we have a pyrite, chalcopyrite-rich breccia with these big class of early wolframite in it and class of early vein quartz. So our veins tend to get overprinted by a brecciation event, which basically brecciates the veins, and we introduce some more sulfide. And then after the mineralization, we have intrusion of mafic dikes. This is a very small, very thin example, but they're clearly cut through the mineralization. So we have a quartz chalcopyrite and pyrite vein, and we have this little mafic dike cutting through the mineralization here. And post-dating the mafic systems and all the mineralized systems, we actually have these quartz carbonate pyrite veinlets and often small faults that again offset the mineralization. Just quickly talking about the gold at RIU, because it's a little bit different to the gold you see in the typical Eastern Goldfields terrains. So in RIU, the gold is often associated with bismuth minerals. So we don't see we actually see a very strong correlation between gold and bismuth in the lodes. So here we have some gold, and it's surrounded by this big bismuth crystal or mineral. In this case, probably bismuthenite, and then we have chalcopyrite up here and here. And if we look in detail at the gold and the bismuth, you can see that we actually have sulfide veins. This is a Maya mapper image, so it shows you the distribution of iron, copper, and bismuth. So we got sulfide veins in blue and green, and this is actually surrounded by a cloud of bismuth, and the gold is generally associated with this bismuth. So we got this cloud of bismuth around these vein systems. And if you look in detail in the SEM images, we see actually these tiny inclusion trails of bismuth minerals. This is actually native bismuth, and some of it is meldonite, which is a bismuth gold alloy. And we get quite a bit of a gold coming out with these early sort of droplets, very, very small inclusions of bismuth. And it looks like these things are actually coming in like a melt. So they form a bismuth melt that scavenges gold from the hydrothermal solutions. And when it crystallizes, it takes the gold out of the system. And this is cut by little veinlets. And here you have a detail of these veinlets where you see gold associated with a bismuth telluride mineral. It's called pilsenite, and here's a halide. There's another bismuth telluride, and then it's surrounded by joseite, which is a bismuth tellurium sulfide. And then later, in the last stage of our event, the sulfides basically come in. The whole thing gets converted to bismuthenite, a bismuth sulfide. I've showed it again here, like where you start with early native bismuth with gold, and then you go to halide and pilsenite, and eventually you go to bismuthenite. So we slowly get more and more sulfur in the system. We're starting off in a reduced system with a lot of with gold, and then slowly we're getting more to a sulfur-rich system when the copper and the copper sulfides come in. So quickly to the conclusions. So RIU is a vein-style intrusion-related copper-gold deposit hosted in Neoproterozoic sandstone and siltstones of Yanina Basin. Discovery was the result of a teamwork. It was regional structural interpretation, and then target generation. It's targeted geophysics, scout drilling, and followed by an extensive resource definition program. And of course, heritage and safety played a very important role in delivering this result, particularly looking at the area, the quite tough area that we're working. So the gold and the copper lodes are slightly different in geometry and timing. Gold generally comes in slightly earlier and copper comes in a bit later. And the gold precipitated most likely according to what we call a bismuth collector event. It's basically as a bismuth gold melt. And copper precipitated over the top of that, and later cross-cutting sulfide lenses and veins and breccias. Thank you. That's where I'll leave it.
And so we come to the 93rd and final presentation.
Good luck.
Noah's Rule. Noah's Rule has been providing independent debt and hedging advisory services to the mining industry for 17 years. As the industry embraces new world and green minerals and a range of other commodities not traditionally banked or hedged, And as sources of debt also expand and deepen, it's more important than ever that emerging mining companies can tap into an independent advisor that can help them understand their risk profile and bankability. Stephen Wray is Director of Debt Advisory with Noah's Rule, and he wraps up the conference with this presentation. Welcome, Stephen.
Thank you, Jerry, and thank you to everyone who managed to last the distance. I appreciate it. I think it was Simon Lawson from Gascoyne who said his views are you need three things for a successful mining company: asset, obviously, people, and money. So I'm hoping at some point all of you will need some money in the future, because that means you're building a project, which is great for the country and great for the industry. I'll just try to hit the high points. Obviously, it's a subject we could go on about. I could go on about for a long time, but I'll hit the high points to give you a sense. So you know that who we are. For context, we're made up. Noah's Rule is made up of project finance and hedging specialists out of the 90s and the noughties, based in Sydney and Perth. We grew from hedging advice, but grew that into debt advisory services. And we're not just hedging people, as some people think we are. Many of you in this room will know Sean Russo, one of our principals. He started the Rothschild office here in Perth in the late 80s, came back to run that in the late 90s. And his co-principal, Dave Rowe, looked after everything to do with hedging and financial markets in Rothschild. They've worked together for about over 3 decades. I'm a recent addition, joined last year. My background is 20-odd years in project finance with banks, and a couple of years as a CFO of a junior mining company. So I like to think I've got a little bit of knowledge, but certainly a lot of empathy for what many of you are about to go through. And I joined Noah's really just to match up the ability to help good people in the mining industry build projects, and that's something that Noah's has been doing for quite some time. So just a couple of things to note from this slide. Near on $3 billion worth of debt advisory over the journey, unashamedly skewed towards the junior and emerging sector, and that's a lot of people in this room. And really the core that drives us all is we believe our customers should establish their own set of criteria and objectives and understand the risks and the rewards attaching to each of those. Our fee model is interesting. It's skewed to the back end. A lot of it is discretionary to the client, and we're happy to back ourselves in and deliver you a good result. As I said, we grew out of hedging, so a lot of our work is in hedging, not surprisingly in precious. There's obviously interest rates and FX there as well. Just to note, the work done in oil, often an overlooked but very much important part of the whole cost structure and risk mitigation strategy for mining projects. Our past clients, some of these are a bit old, but I just wanted to give you a bit of a feel for what we've done and the sorts of work and people we work with. We currently have a few jobs on across states in Australia and some in North America as well, new developments, expansions, and also acquisitions. I'll just talk about Red 5 briefly. We concluded that transaction last year. There was a bit of talk that it took a bit longer than normal to conclude. We're happy to admit it did. We had some specific metrics that we wanted to deliver for the client because that is what the client wanted. In simple terms, one metric, that deal was concluded with just a touch over 900 ounces hedged per $1 million of debt. Similar transactions at the time were sort of well over the 2,000 ounces of hedging. That's a metric. It's good or bad or indifferent, but it's the metric that we were looking to deliver. Compared with Atlantic, a deal done out of Canada by us a little while ago, I mean, that had the most hedging since the crazy 80s. The client wanted that. They wanted to maximise their leverage. They wanted to reduce equity dilution, keep the register tight, and all the shareholders were very, very happy with the end result when they were taken over. Happy to say in each of those cases, the client was happy, the financiers were content and comfortable with the structure, and that's really important and a lot of times undervalued in these sorts of things. A lot of our clients stick with us after the initial debt advisory work. Happy to say that companies like Perseus and Panos sat in this very room over a decade ago and started a relationship with us. We helped them out with their first debt piece, and they're still customers of ours now. Clearly, some of these companies have merged, which is good and bad, but people move on and we can cross-pollinate to new organisations. Enough about us. By its nature, this topic. It needs to be an overview because each company and project will desire and actually deserves a bespoke solution. But in general, we can say that look, there probably has never been such a flow of funds into the commodities sector, to be honest, driven by unparalleled amounts of cash being held and invested, chasing yield across the globe, and also by the, let's say, the J-curve interest in green and new world commodities. Many traditional LME traded commodities are at or around 10 or 20 year highs, and the alternative sources of capital available now are growing all the time, both debt and indeed equity or quasi-equity capital. So it is really actually an exciting time to be involved in the industry. So I won't cover every aspect of debt capital markets because I'm aware that this is the coveted speaking spot and you all want to stay here for another half hour. But I've inventively called them bank debt and non-bank debt, so make that of that what you will. Traditional banks, obviously commercial banks, investment banks, they will give you money for your project, no problems at all. Interesting though, the minimum debt sizes now required to get banks interested are sort of rising all the time, and that makes perfect sense for these organisations. They've been asked to do more with less people, so the bang for buck trigger for them levels are higher. There is appetite to finance green and new energy commodities, but obviously some of these commodities are not yet hedgeable. So naturally, in the early days, the banks gravitate towards the larger scale projects and the substantial counterparts. We sense, and we're actually starting to see tangible evidence of this, that there's a real structural shift away from traditional commodities by banks to these energy efficient commodities. We're not quite sure what all this means just yet, but it's clear the ESG train has arrived. Commercial banks will insist on mandatory hedging levels, but of course, not all banks have the capacity to execute that hedging. So the capability of banks to do that for you is important in your selection of banks. Debt sizing is an interesting exercise with the banks. They will work off debt sizing your project to ratios that are above your agreed structure, finally agreed structure. This potentially means lower debt levels, and they'll also use their own bank price decks. They're internally generated based on their own in-house views. These can be up to 25% below the sort of forward price curve, depending on the commodity. And clearly, if you get volatile uplift in short periods, that gap can widen even more. Some banks will use more aggressive price decks early to increase the debt level, but then stress testing that comes in can often compensate for that as well. The non-bank market, again, this is just a very generic overview. What I will say is there are lots of funds around who are prepared to give you money. Generally, they will be higher cost, but the flip side is generally they can often respond in a more timely manner and might be prepared to give you money a little bit earlier. Non-bank providers are often prepared to lend smaller amounts than perhaps the traditional banks will. And they can also see and they'll give weight to your future plans and expansion opportunities, and they'll give weight to those. Obviously, we see the emergence of sort of government-funded people like NAIF and EFA and Clean Energy Finance Corp, potentially filling the void between the equity and the debt space, which I think is a good thing. Longer term debt at concessional rates is generally well received. In terms of off-takers and streaming arrangements, again, there's lots of parties that provide this. Clearly, they're anti-dilutive to shareholders up front, but of course, they'll be revenue subtractive when your mines are in production. So it's critical to consider the impact on the residual available metals, both from a hedging capacity and also from a cash flow perspective if any other debt is required outside that. And subordination arrangements and intercreditor deeds are really critical in those structures. They can be complex to negotiate as the streamer will obviously want first bite to the cherry on the metals that they receive. And they might not be concerned necessarily about your price risk, but if you owe them money, then I suggest you should probably be. Can't speak about getting debt without speaking about hedging, without at least considering hedging. Look, too many times we see that everyone sort of pushes the hedging talk back until the very end. It can be a little bit late by then. You may well be locked into a sort of a funding arrangement, and you're likely to have less negotiation over volume and price, etc. So if you remember one thing from my presentation, I'll be pleased if you can remember one thing from my presentation. It's really just have the hedging talk earlier rather than later. You'll be better off from a structural perspective, a debt sizing perspective, and a cost perspective. Too often it's put back too late. And really, to summarise this slide in terms of debt with hedging, the key consideration for any company is the balance between the amount of hedging contemplated compared to the impact and dilution of that required equity levels. The ultimate cost of any hedging should be measured over the life of the loan, and it must be measured against the value of the early pre-production equity dilution that is avoided by not hedging. By hedging, I should say. And look, whatever hedging levels are entered into, the key is to determine what you as the producer wants to achieve from a hedging program. Make no mistake, hedging can be a profitable exercise for the hedge provider. So work out what are the most important drivers and objectives for your company before you start the funding process. The flip side to hedging is, of course, no hedging. But we would like to think there's an intelligent and nuanced discussion to be held to determine exactly where you, as the producer, wants to sit on the risk-reward matrix. In essence, the no hedging position really kicks the equity question down the road, which is great if it's never encountered. Fantastic, but obviously, your downside scenario risks are heightened in that event. So again, I just say have the hedging talk earlier rather than later. So in terms of tips for being lender ready, again, there's a lot behind this, but the high level outcomes are just be clear and concise and clarify your commercial and financial objectives. Understand the key issues of importance to all the stakeholders, not just shareholders, all the stakeholders, and determine your expectations, corporate objectives and aspirations of your company. And understand your project. It sounds pretty obvious, but have a clear understanding of the objectives and expectations, and then reflecting that on the nature of the project itself is crucial in setting the right expectations and meeting them. If you don't have a clear idea of what you want and what you don't want, we found that you run the risk of lenders and advisors, for that matter, just taking the cookie cutter approach. Doesn't always deliver you the best results. We think the other part of the being lender ready is the debt carrying sensitivity analysis, really important. You've got to study your project's financial model, review the sensitivities, you've got to apply stress testing, you've got to analyse exposures, measure the financial risk and compare alternate risk management strategies and approaches. I think there's 3 or 4 key issues to focus on. The debt carrying capacity of the project, work that out using recently observed lender price decks and banking and project ratios that you've observed or your advisors observed in recent financings. Examine the market risks inherent to the proposed financing, commodity, currency, fuel, etc., interest rates, and examine the impact of various levels of hedging alternatives and the cost of using different hedging strategies to meet whatever mandatory hedging requirements may be required. And don't forget to address the level of equity that financiers will expect you to inject and the sequence of that funding. So this debt carrying capacity analysis should really assist you in finalising your finance strategy, the structure and quantum of the debt equity ratio, the amount of hedging required to either support the financing package or indeed what will be required to reach your corporate earnings objectives. The more work that's completed, the better prepared you are, the better the results and outcomes will be. It's very important in the process because, as I said earlier, financiers have smaller teams and really need to be selective in pursuing their opportunities. It's our experience that the financiers respond to a fair and balanced, but really competitive and focused process. Proves the quality of the offer and the time frame to complete. And finally, it seems really obvious, but just be transparent. If you understand your project, then you will understand where the pressure points are, what we call the points of pain. Don't be afraid to disclose them. Financiers generally don't like surprises. But when you disclose them, also disclose what is your thoughtful risk mitigation strategies to address those issues. Really, really important. And finally, because I have so much time, I'll leave you with this to ponder how perhaps the name Noah's Rule came about. But we simply want you to be best prepared as you can for future events. We wish you all the best with your future endeavours and hope you'll get to develop a project. Appreciate your time. Thanks for hanging in. I think, and online as well. They've probably already having a beverage. So happy to chat with you over a drink or check out our website. Make contact with us. We're always happy to help. Cheers.
Thank you, Stephen. That brings us to the end. Drinks are available in the Ball and Chain, which is off to one side at the hotel. I'm not entirely sure where it is, but if you ask any of the staff there, they will lead you to it. All right. Travel safely and invest wisely.